Right, we're a couple of minutes past 12 o'clock, so I will make a start. So first of all, a very warm welcome, everyone. Thank you for joining us for the first of this year's Scheme Sessions webinars on digital pensions, delivering a data-driven transformation. Before I get into the intros, just a few housekeeping points from me. So first of all, today's session will be recorded. It will then be uploaded to our website, and you will receive a link after the session via a follow-up email to allow you to watch the recording should you want to do so. Please do ask questions as we go through the session. To ask a question, please use the Q&A function, which you will find at the bottom of your screen. We'll try to answer as many questions as we can. We'll answer those towards the end of the session. And if we don't have time to answer all of the questions, or if we can't pick up your question live, we will get back to you separately after the session. We've got about an hour for today's session, although we will aim to finish a little bit before the hour's up. And without further ado, I will just go into some brief introductions. So for those of you who don't know me, I am Liz Gain. I'm a partner and head of pensions at Gowling. I'm joined today firstly by my colleague Ian Chapman-Curry, who is a legal director in our team. So he's a pensions lawyer. He has over 20 years experience delivering innovative solutions on cutting-edge issues. And just to give you an idea, his career has seen him advise on things like the creation and delivery of automatic enrolment, and a particular focus on GDPR and the response to GDPR when that came out. Ian tells me that he has a strong interest in all things tech, and so he's very much looking forward to advising on the digital decade. We're also delighted to be joined today by two speakers from Scottish Widows. So first of all, Claire Thompson. So Claire has over 20 years experience working in financial services, working across retail for Lloyd's commercial banking business. And then for the last 5 years, Claire's been working in the Scottish Widows workplace pensions business. So as one of Scottish Widows' senior product owners, she leads teams who develop the digital proposition for workplace customers, both on the employer side as the customer, but also for the employees. And part of Claire's responsibilities are about ensuring that the applications Scottish Widows use remain safe and secure, but probably just as importantly are fresh, they're relevant, and they're there to engage the sort of 2 million or so customers who use those business services. So welcome, Claire. And last but not least, David Connor. So David is a design leader with over 20 years experience in financial services, and he heads up the experience design function at Scottish Widows. So David's teams work in partnership with the product delivery teams to create member and employer experiences across the workplace business. And he's very passionate about the role that digital can play in helping people secure their long-term financial future. So Claire, David, thanks very much for joining us. We're very much looking forward to gaining your practical insight in the session today. So without further ado, I'm going to hand over to Ian, who is going to kick us off. Thanks, Ian.
Thanks, Liz. So a data-driven transformation, and this is about the pensions industry being on the cusp of really a transformational period, which is going to see it by the end being a data-driven and largely digitally delivered industry. Now, I know not everyone might be as keen on tech as I am. What I will try to do throughout this session is to make this as straightforward as possible, but we've already had a question in which might be shared by other people in the audience about people who are daunted by the wave of technological change. And even I feel slightly funny about seeing some of the things that artificial intelligence can do, so I understand that. And asking about what the immediate next steps are. And I think joining this webinar is a fantastic immediate next step. So improving your level of knowledge and understanding. This is something that's going to be best tackled collaboratively, because we're all going to be diving into the dark a little bit and learning together. And it's not like the pensions industry has not been doing anything with IT and digital services. We've got lots of schemes that provide digital services to members, whether that's a web portal or use of IT, so trustee meetings being increasingly delivered via platforms like Zoom, and even attending webinars rather than seminars. But the scale of transformation that's going to occur over the course of the rest of this decade is going to be of a different order of magnitude. So this is going to be the first of what will become a series on all things digital and pensions. So don't worry if we're unpacking quite a lot of material. We'll be going into more detail in follow-on sessions. And for today, I'm just going to be covering what I think are the 5 key developments that are driving this change. So just giving you a taster of what those 5 forces are that are driving digital transformation. Focusing more on pension dashboards and seeing what we can learn from the parallels with open banking. And then finally, just a taster around AI and pensions. You can't do anything on technology without mentioning artificial intelligence at the moment. So that's a lot to cover. As Liz says, we've got time for questions and we're going to have follow-up sessions. And what I think is really great is having Claire and David from Scottish Widows, where we can see what some of this theoretical stuff looks like in practice. So the 5 key developments that are going to drive digital transformation. So the first of these is pension dashboards, and this is going to be the impetus for change. It's the thing that's going to force many schemes to engage with digital by being a statutory requirement, but it's also going to then be the catalyst for a lot of transformation that happens afterwards once all the systems are connected. One of the barriers for widespread adoption of digital services in financial services industries and in pensions has been issues around online identity verification, concerns about scams, cyber attacks, and steps that the government and private industry are taking to have secure online identity verification will really help overcome some of those hurdles. So really opening the gateway for digital services to be provided. The third of the 5 forces is blockchain. Blockchain is something that people have been talking about for probably about a decade. It's been the next big thing. It's the technology that's behind cryptocurrencies like Bitcoin. I won't go into details. I've never heard a fully convincing explanation which really simply conveys what blockchain is. But for our purposes and why it's relevant to pensions is that it's going to be used for providing the nuts and bolts of things like smart contracts, which are already actually being used in real estate and certain investment transactions. So those could be of relevance to institutional investors. And continuing that theme, the digital pound, which is the central bank cryptocurrency. So the Bank of England in this country working on developing and rolling out a digital version of the currency that we have in notes and coins, which are relevant in pensions in terms of everything from member payments to making investments at scheme level. And then sitting on top of this, alongside this, penetrating all areas of it, is artificial intelligence, which is such a broad term and can be used for everything from the current buzz around generative AI, which can be used potentially to power chat rooms for members of pension schemes, through to machine learning, which might be useful in things like contract review and helping in due diligence. And we'll come on to that in a bit more detail in a moment. So pension dashboards, and this is the force that I'm saying is the key impetus, and then once it's in place, the catalyst for change. And it's the key impetus because it will be a statutory requirement. So a little bit like automatic enrolment or GDPR, a lot of change will come because the government is telling us we have to do certain things. And in this case, it's join up and hook into the pensions dashboards ecosystem. What I think is really interesting with pension dashboards is it's not completely virgin territory. The banking sector has, since 2018, had open banking, and the parallels between open banking and pension dashboards are really interesting. And I think they can really help us understand the role that pension dashboards is going to play in this broader transformation of the pensions industry. So let me try and test that hypothesis. Why am I saying that the two have these similarities? Success for open banking relied on, and success for pension dashboards will rely on, the data, clean and accurate data. And this is something that's not new to people in pensions. The pensions regulator has been talking about the importance of data for a long time. And we know that from our own experience, having good quality and up-to-date member data is really important. That data to be of use outside of the scheme or the specific database that it's held in has to be in a standardized data format. So when that is plugged into pensions dashboards, it has to be in a format that pension dashboards can read. And then both open banking and pension dashboards have what's called an API, which is basically the pipelines or the cables that connect all the little components. So all of the schemes with the central database, or in the open banking world, all of the banks and the financial service providers and the third parties. So having that standardized open platform permits all the systems to talk to each other and to share that standardized data that's hopefully clean and up to date. And once you have all of those things in place, you then have the ecosystem in place to have industry developments, to have things happen in the technological space to deliver better services for members and to deliver outcomes that we probably don't even know are on the cards at the moment. A lot of the things that have emerged out of open banking have been new developments that were unanticipated back in 2018. So just to show how open banking works and what the parallels are for what pension dashboards might be. In this example, we have a customer who's a customer with a bank, an established high street bank. And this customer is interested in using a third-party service provider. So for this example, let's just say she wants to connect a credit scoring agency with her bank to get more up-to-date data over to the credit scoring agency and hopefully boost her credit score. So what actually happens in this process? The first thing, and before even the customer has approached the third party, the third party will have registered with the open banking registry. So this is a closed, regulated ecosystem, and pension dashboards is going to be exactly the same. The FCA will be regulating pension dashboards providers. So that will have to be in place before the third party is even opening themselves up to providing services. The customer will then say that they're interested, and either by using the third party's app or going online will request access to the service. That will prompt a request between the customer and the bank to validate the request and authorization. So the high level of security that happens when your bank asks you if you're going to make a payment or to do one of these open banking transactions, it usually requires a higher level of security, like getting a number through to your mobile phone or putting a card into a card reader. The third-party service provider will then also contact the bank through the pipelines that we talked about, and the bank will then check two things. It'll check the open banking registry, and it'll check that it has the authorization in place with the customer. And once it's happy that those are all in place and meeting its security requirements, it will send the information or provide the service that's been requested by the third party, which then permits the third party to provide the service or the information directly to the customer. So that is a simplified version of what happens with open banking. Pensions dashboards initially will be in some ways simpler because it will just be providing information about pension savings, but the clear direction of travel is for that to evolve into doing more than merely providing information, but also potentially providing additional things like members being able to request services or to be able to request actions. So where does this take us in terms of pension dashboards? Because pensions, open banking has been with us since 2018. So all of this works on clean, accurate data with the standard data format, with the open banking pipelines, and with strong verification and security provisions in place. So those were the four key ingredients behind pension dashboards, and they've been the key ingredients that have made open banking work in the financial services sector. And it has been quite a transformation. So if we look at what open banking has done in 6 years, it gives us a real flavour of both what's possible down the line with pension dashboards and the pensions industry, but also the pace of change. If you think back to just before the pandemic, when this was coming online to where we are now, pretty much everyone on the webinar will have accounts with the incumbent high street banks, and all of them have developed their services quite rapidly over this period. You can see on the screen there just a selection of the banks and how they now display information from different service lines, different parts of businesses, and indeed from outside of the own group business. Another explosion have been developments for the trusted third parties. So people like Experian and Equifax, the credit scoring agencies that use real-time data to improve credit scoring. Wise, which used to be TransferWise, which uses open banking to make money transfers cheaper. And MoneyHub, which uses the information to nudge people into smarter decisions around saving. But the real sort of headline grabbing changes have been on the challenger providers. So open banking has opened the way for companies like Monzo, Starling, Revolut and Tide to become multi-billion valued banking platforms that don't have any of the overheads of the existing banks, and has really seen them being able to offer services, which has then in turn triggered the existing banks to offer a wider range of services. So how far behind are we in the pensions world to all of this? Well, there are people in the pensions industry that are the new challengers, that could be the names like Monzo in the future. They're all the ones on the screen there are companies that are doing innovative things around digital pensions. A lot of them started out of automatic enrolment and have now seen pension dashboards as the next way of building businesses. And a number of the businesses there have had recent multi-100 million valuations or have been bought by some of the large existing financial service companies. So I think with pension dashboards, we're going to see a big bang. We're going to see, when it goes live, speedy adoption by members, because a lot of people are used to doing online banking and using open banking. There'll be high levels of user expectation because of how well open banking works. There could be the challenges and competition, either incumbents rolling out new services or challengers like the organizations that were just on the screen. There could be unforeseen impacts, so a wave of cyber crime connected to the rollout of pension dashboards has already been anticipated as being one of the potential issues during that period of time, but there could be other unforeseen impacts, positive or negative. But whatever happens, it's likely to be a fast pace of development. And fast pace of development just brings me to artificial intelligence and pensions. And like I said at the outset, this is really just setting the scene for what will follow on with further sessions focusing on this in more detail. But where does artificial intelligence fit into the pensions industry? So some possible uses, and these are some possible uses that are already in place, as well as ones that are just being talked about. So pension schemes sit on huge amounts of data. AI is very good at taking large amounts of data and doing analysis and crunching through data and providing some insights there. It can also potentially be used as part of actuarial calculation work or due diligence as part of transactions. Scheme investment and risk assessment, you're seeing investment managers use AI to take on board a much wider universe of financial information and be better able to provide specific scheme investment advice. Employer covenant strength assessment, same story, being able to take in a much wider amount of data when looking at the overall strength of the employer covenant. On the more individual level, you could see generative AI chatbots being used as first level for member queries and generation of engagement and communications. So natural language questions that members have being answered in normal English language before they have to be escalated to a human administrator. Financial guidance and planning, we've already been used to robo advice in the pensions industry, and this will really just take it to the next level of sophistication. And although there are all the threats around data and cybersecurity, the technology can also be a shield as well as a sword with a role in enhancing data and cybersecurity. There's been a raft of identified risks. So talk around amplification of data errors. If there's error in the data, that will be amplified by the AI using that data. Consumer protection concerns, if AI is abused in that way. Discrimination, especially if the data is inherently biased and it inadvertently discriminates against groups of people. The impact on competition in the tech world, obviously we see some very large companies that people are concerned about from a competition point of view, and AI can really consolidate that impact. More broadly, does it have the possibility of leading to financial crises on the scale of the 2008 financial crash or even larger? And then finally, in a sort of a slightly nebulous term, but a real thing that people are having to deal with is this erosion of trust, disempowerment, and lots of transparency, basically losing the human touch if things are just automated rather than being dealt with by humans. The next part is all I'm going to do with the next part is signpost what we have next week, which is a whole session focused on data and cyber security. Obviously dovetails well with digital transformation. The more things are provided digitally, the more there are the risks of data and cyber security. So the the, the slides, the messages that are in the slides here will be echoed and emphasized in next week's talk. What I'm going to do now is pass over to David, and he will be showing us, he'll be telling us about what this means from a customer experience point of view.
Thank you very much, Ian. I just want to say it's so amazing to be here today, and thank you so much for having myself and Claire. Yeah, exactly. So in this next segment, what we're going to do is bring to life some of the topics and themes that Ian has explored, and just talk a little bit about it also from our own perspective. So let's go on to the next slide. The first, I guess, topic I want to talk a little bit about is the theme of digitizing engagement. And obviously, I think it's been talked about a lot and recognised that there is an engagement challenge with long-term savings in the UK. And from a Scottish Widows perspective, that's something that we're really passionate about helping. You know, we're a purpose-led organisation, and we feel that we've got a massive role to play here in helping the people of UK, helping bridge that gap and bring people closer to their long-term financial futures. So I just want to talk a little bit thematically. I think that what's quite kind of interesting is to start with the question of why are we digitizing this? And I think one of the key responses to that is that if you look at across the board now in life, but digital is fast becoming the number one place that people turn to. It's the channel that they go to in the first instance. And there's a behavioral framework we use in our organization called Usual, and it talks about some of the behavioral barriers that people have around any type of change. And it stands for sort of people are unaware, so they didn't know they could do things. They're maybe scared. They are not, they have a fear or anxiety about engaging. They're simply unable to do so. Or the A is for apathetic. And finally, the last barrier is around having limited bandwidth. And actually, I think that digital is actually a really great leveler in that limited bandwidth, where many people's lives are digital now, are online. So putting your future long-term finances in the place where people spend a lot of their time and manage their lives is a really fantastic way to sort of overcome that barrier and bring people closer. You know, people, as you can see here, they're looking for ease and convenience, instant access at any time on their terms and in those moment transactions. There's a stat here you'll see in the bottom left-hand corner, which is 266,000. And that's the number of different device type combinations that our online services within Lloyds Banking Group have to be able to absorb that variety. So that's an example where maybe people using their laptop with their chosen browser, or it could be a phone with a different operating system and software. And that number is just increasing to grow with the diversity of devices and different online platforms that people are using to engage. I have some icons here in the bottom of like a television, an Xbox controller, if you will, and a car. And I think some people might ask, well, what has that got to do with digital engagement? But actually, we've seen people engage with our online services through their smart television, through their Xbox, and also through their car. I don't know if it's definitely not my car. It's not sophisticated enough to access my pension from it just yet, but who knows, maybe the next Connor household car will have that. But yeah, I think we are seeing a variety of different ways in which people are looking to engage, and primarily through digital. In terms of how we've responded as an organisation to this, I guess there's a couple of key highlights. We really want to value and give people choice. So we have a website or a web experience for engaging with your pension. We also have a native app. And for customers who have an online banking relationship with one of the retail brands of Halifax, Bank of Scotland, or Lloyds Banking itself, you'll be able to see your pension in those ecosystems also. We're very mobile first also, and I think the principle we have is designing for the smallest screen first, so that we have that benefit that when we start to take those experiences into different places and spaces, they adapt well because they were optimized for the smallest use case in the first instance. And one of the things we've really spent a lot of time is investing in our platform, investing in technology to help superpower and make sure that, you know, I guess a lot of the things that the users interact with on the surface layer they need to be powered by things behind on the backstage that really help support experience. You know, it's not great experience if something looks great, but it's a 6-minute response time, or there's things behind scenes that just don't feel like they stack up. All of those things working together in concert are the experience, and the platform side is really important to making that happen. And very finally, on that kind of theme of digitizing engagement, a couple of areas we're looking to explore next are around reimagining the onboarding experience. It's so important that we've built up a lot of effort and focus to help people engage, that when they do so, we make that experience and we pay it off, and we do so in a way that it creates that feedback loop to continue. And one of the ways in which we think we can help do that is through deeper personalization and having nudges and insights baked into the experience as well, but doing so in a very personal way, speaking to that individual circumstance. So that's a little bit about, I guess, a perspective on the engagement challenge and how we're looking to digitize that and help make steps towards bringing more people closer to the future. Claire, on the next slide now, is going to talk a little bit about how we're looking to keep customers safe as we do that.
Thanks, David, and afternoon, everyone. So according to Money and Pension Service, an average person who's scammed out of their pension loses £90,000. You know, that is significant. And, you know, in a world where we believe pension fraud is probably underreported, we saw between 2020 and 2021 a 45% uplift in the reporting of pension fraud. So that's why in Scottish Widows, this is a really key part of everything we do in terms of building our digital journeys. And I guess we also recognise that the cost of being defrauded goes way beyond the financial loss. There's also a real psychological and emotional impact, which is often irrecoverable. And that's why we build security into our system, right from roots all the way through the journeys we build. Both digital and non-digital services, albeit today we will focus on the digital element. So the tactics would-be scammers use to try and get hold of people's money and pension savings are increasingly sophisticated and can catch almost anyone out if they're not careful. So we might all think we are digitally savvy, but how many of you would post a big birthday celebration on social media? I know I have in the past. And think about, you know, potentially someone sharing their 50th birthday party online, for example. That is just a patient scammer waiting a few years until that individual then turns 55 and are eligible to access their pension savings, which is a clear example of high value fraud. So the scammer profiles their chosen victim online, looks at, you know, whether their job's likely to give them a bigger pension, and then gets in touch to offer them a too good to be true way to kind of grow those pension savings in something better. You know, that could be crypto land, it could be unregulated investment scheme. But one thing's for sure is that individual, you know, once the money's gone, it's gone. And any financial opportunity that looks too good to be true probably is. So, you know, another way scammers try to defraud people is by stealing their identities. So Ian touched on this a wee bit, but, you know, with criminals using fake emails, phone calls, letters, counterfeit ID, bogus websites, they all look real, but that's where they access bank accounts to then get the money out. They may even take a fake driving licence, which doesn't actually cost that much to buy in the black market, and they can then kind of access that way. So for us, while we wouldn't want to give too much away, because let's face it, kind of sharing our security strategy doesn't feel all that safe, does it? It's fair to say that tech can certainly help. So we build security in every layer of our digital experience, from infrastructure right through to our application security. Starting at the start, when we know we want to make a change to our digital journeys, we undertake a full security assessment, which considers the parts of the digital journey we'd want to change, and whether that's our kind of back-end infrastructure or our front end, you know, the application layer. We're always considering, you know, where our vulnerabilities are in that. We also do security testing before we release every set of code. And we are linked into organisations who are really advanced in their knowledge of how hackers do get into the system. And we engage with them in an appropriate way to test our code on a regular basis to get them to identify any weaknesses so that we can proactively strengthen our defences. Our customers, we're very fortunate our customers benefit from Scottish Widows being a part of Lloyds Banking Group with its 6 billion digital customer logins each year. And to Ian's point, we have invested significantly in having that strong verification and identity process. We work with experts who achieve additional levels of security for LBG app users, looking at around 400 different ways that your phone works. So, it's not just about how you log in, it's how you use it, whether you're left or right-handed, the angle you use it at. It combines machine learning with human experience, and that's where the tech can really help us here. And it captures live image capture so that we can be sure it isn't a generated image. So put that into context a wee bit. I went through a digital journey recently. They had a very rudimentary process where they asked me to take a photo of my ID and then a photo of me holding my ID. That was how they thought that they were kind of defending against scammers. I went into Bing image generator, and in a couple of minutes, I had an AI photo of someone holding a driver's license with their photo on it. So it just goes to show that, the opportunity that's there and the importance of making sure that we're doing everything we can at every layer and every stage, and using the tech as kind of Ian alluded to earlier, as a defence, not just that kind of sword that can catch us out. David's going to talk now a bit about how we are bringing innovation into the digital experience and share some of our insights around that.
Thank you. Ian talked a little bit before about open banking, so I can and pension dashboards, so I can maybe bring some of those topics a little bit to life also. But happy to answer any questions on the chat on this topic if there's sort of deeper places to go to. So what you'll see on screen at the moment is an image of it's the MVP of the next build of our app that's coming out to members. And one of the things you'll see here that front and center of the experience is around connected finances. Using the word connected, I guess through design, in the sense that we saw a lot of in our research on this topic. You have to be very careful with words like adding. It gives us association or connotation that you're bringing things into one place. So the idea that customers, our members, can come into our experience and make those connections to see that broader picture of their finances is really important. So again, another good question to start off with is, why are we doing that? Why is that significant? And I think what's really fascinating for us is when quite often we do research in our labs and we invite people in, one of the first areas of discussion gets into how do they organize their finances. And one of the things that's fascinating is it's very individual. Spreadsheets come up a lot. People have their spreadsheet and it's their way of making sure they keep on top of things. And quite often it's their partner as well. There's someone else in the household or family that is part of this decision-making process, or there's things that go into, excuse me, that come into play from other people, not just the individual. We've did a lot of ethnographic research actually, where we would go out to customers' homes to have this conversation with them rather than coming into our labs. And one of the things that's really fascinating that happens often is people will show us their shoe boxes, and it's of old shoes, of letters, of pension statements they have. So this is kind of like an area where the organization of finances and helping see that connected picture. Many people in the UK have had around 7 to 8 different jobs in their career, and each time potentially may have had a pension. So having that all together in one place is actually really helpful around getting to that true answer of, where am I at the moment, and what are the steps I might need to take in order to improve that outlook. So I would really sort of focus on this connection is super important as part of a bigger conversation, as part of a bigger mental model that customers go through. But that first place is very important. What have I got? And the connection and being able to bring those products into one place is really helpful to do that. you'll see here some of the statistics. Really fascinating so far, and this is very early data. I have to cover that off. This is sort of 2-3 weeks into our release, but I wanted to sort of bring something that's timely and relevant, given that this has just happened with us. But 40% of the connections that people have made through our service are actually for non-pension related products. We mentioned blockchain and crypto earlier in the chat from Ian, and whilst those product types or holdings and those product categories is not available for our service at the moment, when we've been doing the testing and development of this product, those are things that people have said they'd be interested to add. So I think where I'm kind of going with this point is it's a very personal and individual thing. And when you ask someone what matters to them, what are the things that they hold true relative to how they manage their finances or how they're thinking about the future, is very personal, individual, and I guess responsibility from Scottish Widows' perspective, but in organisations who are looking to help customers in this way, is providing a variety and flexibility for people to tailor this in a way that is suitable for them. We had over 3,600 connections made in our service, and that was without any promotion or any big bang. We just wanted to make sure we tested and made sure that the things that we knew to be true in our development cycle proved to be true in production. But what was really fascinating also is that data did not include the iOS ecosystem of our products, because they weren't alive. So this is just for Android users, which is actually a smaller demographic of our wider base. So real appetite for this, and I think it's really early days still. And I like the word earlier about hypothesis, and so our hypothesis that connected picture is super important in terms of making those bigger decisions and choices around how you get to your long-term outcome. We are really using the data to test and learn, and it'll be iterating our service based on the feedback loops we see from customers using this data. And very quickly, cover off how we've responded a little bit more. What we've chosen to do in our app is make that connected view front and center. So you'll see here, when you come in, you'll be able to see either your Scottish Widows product if you have it, but if you've also made connections, we hero on them straight away as well. So you're always seeing the summation of everything that you have connected with us. We partnered with a fintech called MoneyHub to help create this view, and MoneyHub been a great partner to work with. But one of the things that we've chosen to do is that this component of our experience is all done natively, and it all happens in the app. So it is very premium, and it doesn't require the user to go to different parts of our app to get this picture. They see the connected view on the home screen, and then when they delve deeper, they get into those details. And one of the things we want to do is really enrich this further, because I think the connected picture is part one of the puzzle. The next part of that is, what does this mean? What choices do I have to make now to maybe improve that outlook? So things like embedding projections into this picture, and also links to the PLSA living standards to help make that connection to what this could mean in the future. Super important. And just a final wrap up on this section, in terms of things we're looking to do for future developments, is really taking this further. So being able to embed this experience with the holistic spending insights, and thinking about portfolio level investment analysis and performance. So giving people that holistic understanding of things before they can delve deeper into each of the different categories to get the more forensic view at a per product level. Claire is going to take us home now and going to finish up on some of the other ways in which we're looking to innovate on our experience.
And Liz, I'm conscious that you want to open up for discussion, so I will just take 2 minutes to kind of do a quick walkthrough here. So David's talked about, a huge amount of effort and thought goes in from us to thinking differently about how we can engage our customers. And we're always looking at how we can bring innovation through our experiences. But we are thoughtful about where we introduce relatively new technology, and we want to ensure that we aren't compromising customer outcomes or risking data issues. And tech like AI brings significant advantages, but it comes with it the risk of bias and hallucinations. So we have been very particular around how we introduce this into our business. So for us at the moment, certainly, it's a combination of human interaction, but that human interaction being supercharged by technology that allows us to safely take steps and test the water in this space. So as I mentioned before, we're a digital first but not digital only business, and we appreciate that there are many vulnerable customers for whom digital just doesn't work. So tech, combined with the fact we've got the biggest private data pool in the UK, ensures we can build better customer experiences for that customer base. There's real value in colleague interactions, especially for complex transactions or moments of truth, as we refer to them. So for transactions that can be served easily, we would use AI to route customers to the right place quickly so that they can do the thing they want in a way that suits their specific need with minimal hassle. But in listening to the customer, what we'll be able to do with AI is recognise intent and sentiment to route them correctly. And I think that's a real kind of interesting way to use this technology. We'll then use the data we've got to understand the context of what's going on with that customer. And this, overlaid with our deeper understanding of colleague capability, ensures we serve the customer in the right way. So just a quick example on this. So we could be in a position where the colleague is wrapping up their call with a customer, checking if they have any more questions, and the customer might say no, but if the AI coach has picked up a hesitation from the customer, it would then guide the colleague through that emotive or complex conversation. It'll also ensure that any kind of mandatory regulatory scripting's covered, pick up any post-call actions, ensure that everything needs to be done to delight the customer in the way that we want to. So kind of really interesting in terms of where we see that evolving and going to. And another key pillar of our strategy is gamification. So for us, this is a framework we're using to realise deeper levels of engagement and to influence customer behaviour change. So gamification is a tool that harnesses elements of games like reward, challenge, progress tracking to really motivate people to take action or make a decision. And by making tasks and learning more enjoyable and engaging, and particularly for complex concepts like pensions, gamification can really help by taking those ideas in theory and making them understandable to customers, which we believe will build trust and strengthen that customer relationship. So hopefully this has given you a flavour of where we see the trends and how we're starting to use them to better engage our customers. Liz, sorry for overrunning slightly, but I will hand back to you now just to kind of open up the discussion.
Lovely. Thanks very much, Claire, and thanks very much to all of our speakers. We have had some questions in on the Q&A button. We've probably got time for one, possibly two. So I'll kick off and I'll just open this up to the panel, and please jump in. But one of the questions is what are the immediate next steps for trustees who feel a little bit daunted by this wave of technological change? I don't know if someone wants to kick off on that.
I mean, from a legal point of view, I think getting to grips with pension dashboards has got to be up there, because if nothing else, that's the one that has a timetable and is a statutory requirement. I said at the outset, because this is a question that came in early and I'd sort of picked up on, but attending these sorts of webinars and, trustee knowledge and understanding and trying to break these things down and understand them is also a fantastic step. But if it was a real practical next step, it would be ensuring it was on trustee meeting agenda and that it was being at least addressed by the scheme's third-party advisors, because obviously the trustees themselves are not going to be plugging in the pipe work or doing the programming, maybe in some very small or bespoke pension schemes, but not generally speaking.
The add I would have to that, Liz, is we recognise, the power of the employer in engaging customers and with their pension scheme, members with their pension scheme. So I think kind of, yes, to Ian's point, really kind of getting that on the agenda and making sure that you're talking about the data and exploring the data, because I think that really helps, as we've seen, kind of getting the employer engaged then ultimately has really positive impact on customer outcomes. So that's where certainly I would suggest is a good place to start, get the conversation going, thinking about those actions the employer can take to really drive that engagement with our members and customers.
And that can also be a really fantastic resource depending on the size of the employer and the sector, but having the support, we saw this in a lot of the GDPR rollouts, that if the trustees were working together with the employer, then you've got potentially a full IT department or an HR department that's helping unpack some of these very complicated things.
Yeah. Thanks very much. I've probably got time just for a very, very quick final question. One of the questions that we've had is around sort of whether actually this could be a bad thing rather than a good thing. So is there a risk that having more technology-driven applications and what have you alienates rather than engages members of pension schemes, savers? Are we losing that human touch? We've probably all been in a situation where we're through to helplines, or we're on with chatbots, and it's just very frustrating because actually all you want to do is talk to somebody. Do you think there is a risk of alienating people rather than helping people?
I think there is certainly a risk. I would point to what Claire mentioned in her last slide, where the best possible outcome is where the technology is supporting and delivering better outcomes. And what's the phrase? It's an amazing phrase. The delightful experience.
Delivering delightful customer experiences.
Yeah.
So if the technology, the ideal is that the technology is answering basic questions in a natural language way, so people aren't getting frustrating having to hold on a phone line, which means that there's advisor time freed up, or the scheme administrator time that's freed up to actually deal with the complicated ones. I would just, in terms of the technology, and it's tied with the first one about things being daunted, it's not getting too wrapped up in the tech speak and the technology, and it's going really back to basics as to what's happening, what it's for, and how it can improve what you're already doing, rather than, you will alienate people if you force a traditional paper-based scheme and you suddenly overnight it's entirely digital and nobody's got any option, and it's an older demographic and they're all very confused about it. So the slides and the pieces that we heard from Claire and David, I think, sound very promising for how technology can avoid that.
Thank you. Right, I probably need to move to wrap up now, but thank you very much to all of our speakers. I suppose from my point of view, if I was thinking about the main things to take away from today, I think first of all, for me, just the sheer amount of change that we're expecting over the next few years, which has, I suppose, come as a bit of a surprise to me. But as someone who's a bit of a technophobe, I guess, it is interesting to hear about all of the protections that are in place, and that will sort of benefit the public as we move forward with this. I think number two for me, that if all of this is done right, this is going to help member engagement. It's going to lead to more members and members of the public just generally being sort of more engaged with their pensions, taking more notice of their pension earlier on, and that's got to be a good thing. I was quite interested in the connected pensions point, and part of the reason for that is my daughter had Good Morning Britain on the telly this morning, and they were talking about a programme that's going to be on ITV tonight about people tracing their old pensions. And they had a lady on who'd suddenly found that she had thousands and thousands of pounds worth of pensions that she'd forgotten about and lost because she'd moved between different companies with work and what have you. And there was a whole section on it this morning. So actually I thought, well, the connected pensions piece is really interesting, isn't it? Connected finance chances when it comes to thinking about things like that, because hopefully that sort of thing will become a thing of the past as we move forward.
So is that going to be like Cash in the Attic?
Yeah, something like that. Yeah.
Air hunters.
Yeah. And then finally, I was really interested, Claire, in the slide on gamification of pensions, because who thought pensions could be that interesting? So yeah, as I say, thanks ever so much to all of our speakers, and particularly our guest speakers, for joining us today. It's been really insightful, and thank you very much. Finally, just a plug for our session next week, which is on cybersecurity, where we'll be joined by the former e-security specialist at Tyler's UK Limited, together with a couple of our internal colleagues on GDPR and all things cybersecurity. Finally, to all of our attendees, thank you very much. You will be sent a feedback form at the end of the session. I would ask you, please, if you've got a couple of minutes, please do fill that in. We appreciate all of the feedback. Thanks very much, everybody, and have a great afternoon.